just, but the party break up and break down 50-50 and 51 if you include the Vice President of the United States, that the Democrats will, along party lines, get this $1.9 trillion package approved by next week. Jack McIntyre with us, Kiana Danielle with us, the Cryptocurrency Investing for Dummies author. Kiana, let me first get your take on what the senator's saying, that this is done. It's happening. It's going to be, fact, and we move on from here. What did you think?
So my commentary will not be from a political or an economist point of view, because it's frankly not my position to talk about that. For me, it will be more from a money management point of view for people who will be receiving the stimulus checks and those who are worried about inflation that could be arising. So those are the things that people should be worried about. I have no power over what is going to happen.
Well, I know that. I was just asking what you thought. But Jack, let me ask you, I'm kidding, but Jack, one of the things I wonder about is where this goes, because I guess the senator's point was there's a lot of good we can do, more vaccine, rushing that, help some schools out, help those who are really down and out and as a result forced out of their jobs or in a real hurting way. But that, he said, would be a fraction of this $1.9 trillion cost. This would not be the first time the government has spent more than it needed to. The markets seem to be okay with that. Are you?
Okay, so Neil, I'm a proud member of the bond market vigilantes, and I'd say no, the bond market's not overly thrilled with this. Treasury yields, 30-year yields increased about 50 basis points from August to end of January. In the month of February, they increased 50 basis points alone. The point being is that the bond market, which kind of sniffed out that this is going to be close to that 1.9 trillion, isn't happy with it. You actually last week, short rates backed up, kind of sending a message to the Fed that, hey, we don't think you're going to be able to keep rates as low for as long as you think. So this is the stress being created about the probably big wave of inflation associated in part with other things, but with this 1.9 trillion. It's a way of saying we probably don't need 1.9 trillion. But you're right, it's politically motivated.
I was thinking of you kind of when you talk about cryptocurrencies and Bitcoin and been benefiting through this environment. They're all volatile rides, I get that. But is it safe to say that this is an environment where there's a lot of spending, a lot of all this other stuff that's going to benefit all of these type investments?
Absolutely. So these kind of money printing, the biggest fear clearly is inflation in the long term. I understand that in the medium term, inflation right now is low because of oil prices plummeting last year and rent going down because people didn't have money. But in the long run, I am worried about inflation. And the good thing about at least some of the cryptocurrencies, such as Bitcoin, is that there is a fixed amount. There is no way you can print or create more Bitcoin more than the 21 million coins that can ever be created. And personally, I am investing in such assets as a hedge against the inevitable inflation that could be facing us in the future.
Jack McIntyre may be owing to his young years at 87. Chuck Grassley is worried about inflation. He remembers what hyperinflation was. He isn't saying that's in the works right now, but that it's something we always have to worry about, and measures like this in Washington, where politically he's coming from, it brings us to that whatever happens in incremental steps means more steps, and that we could be in a bad direction here. Are you worried about what he was alluding to, a 70s repeat?
Okay, so it's gone from being a fat tail event to certainly one that is definitely plausible. I am a little worried about it. The one thing that kind of keeps me saying we might not get there is just the huge amount of debt that we're starting with. I mean, the debt is 27 trillion, give or take. But yeah, one of the things which is very unique about this cycle is that the Fed is seemingly embracing inflation. Normally, they would be saying, hey, we probably need to think about removing that punch bowl, but they're not doing that. They're actually adding to the punch. So that gets me a little worried, because there are clearly going to be some unintended consequences with all of these policies being put into place.
All right, guys, and I'm going to have you back a little later. We'll be talking a little bit about where this stimulus goes and what are some of the good vibes for Wall Street as well, depending, again, on your point. All right, I want to bring our panel into this. Jack McIntyre back with us, Brandywine Global Portfolio Manager. I didn't even identify him prior. I apologize for that, Jack. Kiana Danielle, the Cryptocurrency Investing for Dummies author, and hardly a dummy, just a resident genius here at Fox Business, David Aswin. I think he is part of our mix here, isn't he, guys? I thought he was. He will soon. Jack, let me get your take. Oh, there he is. Okay, on what Kurt was saying, because I do think this kind of, if you'll indulge me, goes into the markets and the economy. Now we have a curse of riches, right? More vaccines than we know what to do with, and apparently far more to meet the demand that is still robust, but they're piling up in shelves and refrigerators. I'm wondering if this stymies the process, it stymies the recovery. What do you think?
I don't think so, Neil. I think this is all good news. I mean, we're going to get up. So with the last 3 days, we've done.
David Asman gave me that question, and I thought it was a dumb one, so I apologize for that. But
fair and balanced. Fair and balanced.
Hey, I'm a glass half empty kind of guy, but that's very empty. So no, it's all good news. I think we're doing 2.5 million the last 3 days. We're going to get up to 4 million a day very quickly here. So this is in part why we don't need a huge fiscal stimulus package.
What do you think of that, Dave?
Well, I agree that we don't need a big fiscal package this big. I think it's a mistake to call it a COVID relief bill when so much of it, Republicans claim over 90% of it, won't come into effect, won't be spent until after the pandemic is over. So, I mean, you know, we're just spending an enormous amount of money on stuff that has nothing to do with the immediate pandemic and the immediate ability to get needles in people's arms. I mean, that's really the key. By the way, I think that a lot of people were holding out for the Johnson & Johnson shot because it's only one shot and it's the old style vaccine as opposed to the RNA vaccine. So once Johnson & Johnson comes out with 100 million doses, I think they're going to go pretty quickly. Having said all that, once again, I think the key right now is that what we're experiencing is a ramping up of the size of government, the likes of which we haven't seen since the New Deal. Or perhaps
right.
Lyndon Johnson. So that's the thing that worries me more than anything.
There's going to be a lot of spending, Con, isn't there?
Yes. Now, actually, I do want to touch on something that this panel seems to not be mentioning, and that's the fourth wave of coronavirus that could be spreading already in the UK. Some of my friends are catching it, and the second time is actually much, much worse. Also, we don't even know how long the vaccines will be effective. We just don't have that data. So I know that the previous segment, I didn't answer you directly because I want to stay out of it, but I don't think the stimulus check is completely absurd at this point. I don't think it's absurd. I just think that it's not even enough. And first of all, if you need a stimulus check, then you need to be very, very smart with where you spend it, because $1,400, like, what does it even cover?
Yeah, you're right. It's still early in the process. We're hopeful, but we're not blind to that reality. Guys, thank you all very, very much.